All right, and welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So we got a red week. We talked about this in last week's video. We said it was going to be very hard to get through 6,000 in a straight shot, and we did finally get our pullback this week. And I talked about this on my channel. I said Wednesday could be a day where we would look for some risk to open up, maybe some volatility to open up. And I specifically said that because we have a VIX contract roll on Wednesday, and those contract rolls open up a fresh cycle. And a lot of the time you can see the decay kind of go away from there, and the market is not as hedged as it normally was. And probably not coincidentally, on Wednesday we saw the 30-year Treasury note yield actually hit 52-week highs. Yesterday we hit multi-decade highs, not by a lot. The high was 5153. And the prior high was 5152, but it did hit multi-decade highs. It has backed off since then. I think perhaps you had maybe a little too many bond shorts. You can see here that right around the 46, 4.6, we've kind of gone up in a straight line since that. So maybe too many bond shorts here. It just kind of crowded right now, but it did hit new highs. And another kind of story this week as well was the Japanese bond yield here. So now at 3.6 on the long bond, 3.61. That is real. I mean, think about this. This was at 2.8 not that long ago. Really just like a month or two ago. And that is obviously a problem because that puts pressure on the dollar yen. And if that gets too far down, they got to defend the currency, and that could cause problems for the carry trade. I would say right now, yeah, like 140 here could be problematic if we break through that. If this can hold that area, I think the market will be okay. But right now, that is a concern here. That said, we are seeing a technical dip buy here on Friday, and it's a very good. We gapped right down into the 100 and 200 and really the 20 moving average on the SPX. In a straight pullback here. So good, good dip buy there. Part of the catalyst for that was, we were essentially flat yesterday, but Trump kind of walked back and, walked back the EU. Not that there was a deal, but essentially saying, he would look at 50% tariffs, so, it's Trump's market and we're just living in it. We're just trading it. So we did have a shot this morning to the downside, but nonetheless, we're just, backing off and retesting this area here. So this is a big line in the sand here for the market, right around 5,800, we'll just call it 5,750. That is where the 20 moving average is, and right around this area here, 5775 on SPX. And actually we can extend this out, and you can see it essentially goes through the lows of earlier this year, and basically the pre-election area. So right in this vicinity, and we are getting a technical bounce off of that. So this will be an area that bulls need to hold moving forward, and if they're going to try to consolidate this move and make it run at all-time highs. But we did correctly look for a pullback this week. We have it, and bears have a chance here to do some more damage next week. But we'll see. If nothing happens over the weekend, we have a 3-day weekend coming up here with Memorial Day. If nothing happens over the weekend, you could see a little bit of a right tail, maybe a gap up Monday. If we don't get any more trade news, or if we get good trade news, you could see the market recover a little bit here. But so far, we looked for a pullback. We've got it. If it continues lower, I'm going to say 5550 area, maybe 5500 is going to be very critical structurally to bulls. So this is a big line in the sand. And I mean, you can see it anyway. It kind of goes back to here, but really just starting here. As long as this area is holding, I'm going to say structurally, there's nothing wrong with the market here. And you can see here, if we take a fib, it's basically a 50% fib retrace right in that area as well. Or sorry, 382. But yeah, for bulls, you'd want to hold this here to kind of keep the structure positive. into the summer. If that is the case, especially if we can hold this level, I think we can see a summer rally where we do try to challenge the all-time high. We also had some news today from Bessent, and he is reportedly going to be looking at loosening the deregulation in banking. All right, so you can see here he talked about easing the capital rule for banks this summer, and talking about kind of in a Q3 here, which again is sooner than expected. So this is actually quite stimulative, and maybe having a little bit to do with the bounce here in the market. So, we could see that summer rally, even despite some negative macro. So just something to consider here. The market may try to front run that. But overall, a lot of headlines this week. Some other stuff we can get into. Trump signing the executive order to ease regulations on uranium stocks. We can look at that. We always cover CCJ here. Look at the big move here. They're up 10%. URNM up 12. URNJ up 15. And then we got nukes, kind of the new school here. ETF, that is up 6.5. Take a look at ACLO. Up big there, up almost 29% there. SMR up 18. Look at this beautiful channel here. You have the nice falling wedge in blue, and then a bull flag really on the weekly time frame. Nice breakout there. NNE up 30%. So uranium stocks, nuclear energy stocks really getting a huge bid here. So lots of news, lots of headlines this week. Despite the kind of quiet scheduled news releases. Next week, we don't really have a ton either, but we do have NVIDIA earnings, and that will obviously move the market. So a lot going on here, but overall, right now, 5750, we'll call it, is a big line in the sand, and there's gaps to fill down here should we go lower, but bulls remain in control for the most part if this level is holding. QQQ again, kind of back testing this bull market trend line, and again that goes all the way back to 2023, just the very beginning in January. We got above it, and we gapped down today, but it is holding right now. So big levels right here as well. We gapped through them last week. IWM taking a little bit of a hit yesterday. This is starting to come back to the flat line again, a down week there. It did fill its gap, and maybe starting to put in a little inverse head and shoulders here. We'll have to see if it can curl back up, and if it triggers, this could take the IWM and small caps much higher, but it has not triggered yet. Same kind of look there on the Dow as well. So the shoulder, possible right shoulder, but these patterns have not materialized yet. So we're not going to entertain them until they actually trigger. SMH here again, gapping down. We got to adjust this. Not quite a bull flag anymore, but nonetheless, it's still a pullback pattern, and we're holding the 200 moving average. And again, NVIDIA earnings next week. That will certainly move the market. IGV also, again, very strong still. A little pullback here, but again, coming off the lows. And I still like cloud software moving forward. DJT transports here, holding the inside bar pattern and testing that that trend line there, and it is holding as well. So transport's hanging in there. Interest rates on the 10-year, again, up this week, but pulling back. It's really the 30s that were really out of control this week, and they are bidding back down. We also have, we want to take a look here. We also have a bit of a, well, the 2-year yield is still on the weekly chart here. 2-year yield curve was up a little bit this week, but pulling back a little bit. So a little bit of normalization. 2-year yield bouncing back this morning. And this will affect the June Fed meeting. I mean, this is not, if this rolls over, I think we'll see a cut of a 1/4 point. But if this breaks back above 4.1, that's going to hold the Fed off. And you're going to hear it from Trump if that happens. But my kind of general lean is this will roll over back towards 3.6 to 3.8. And I think that'll give the Fed enough room for a cut. Again, it's not a big cut, but, what's a 1/4% at this point? But it is something. XHB down on the week. Again, high interest rates affecting home builders finally. And VNQ down as well, but not the worst pattern. That's still trying to hang on. It's actually green today with the market down. So XLF here flat on the day. And again, losing this trend line here, which isn't the end of the world, but there's a big trend line there. So pullback pattern there, got close to all-time highs. KRE as well. So a little breakdown there, filling the gap, but it's holding 56. We'll continue to monitor that. If financials start to slip here, that's a sign that maybe that dollar yen trade is a problem. But we always keep a close eye on them. But they're holding up for now, and we'll give them the benefit of the doubt. Broker dealers steer just off of all-time highs. So if broker dealers are hanging in there, I can't imagine the carry trades broken yet. But things can change quickly. Got to keep an eye on those. Into commodities, oil up 46 cents today, and it did gap up, or didn't gap up, but it had a rally 2 nights ago on some more Middle East tensions, but it came back in pretty sharply, and it's holding my support level at 60. You can also see, I know this is going to be a little sloppy. I'll zoom into the 4-hour, but you almost kind of have, you could make a case you've got kind of like a flag here. So it's a little sloppy, but we'll go back to the daily. It's kind of, a little flag-esque. You have a higher low. If this can break back above 62, I think it can try to break out towards the mid-60s. Okay, so you got, if we go back, you can see, 64 has been a big pivot point for a while, but through this area, we'd be looking at, 66, 67. But oil trying to hang in there. XLE was down this week as well, but watch this. If this becomes another higher low, it could be very bullish here. This could be a catch-up trade. Same thing with XOP. It's holding the 50 and the 20 MA. If it can get a bounce off that, it can try to go higher here. OYH, same thing. It's a lot weaker, but it's working on 1, 2, possible 3 higher lows. So they're weak. They're laggards, but sometimes laggards turn into leaders. And they're definitely very hated right now. Nat gas today this week with a kind of a flat week. It gapped down Monday and then just kind of closing where it opened. You have a mini inside bar here on the daily. Dollar index down about 1%. So just taking a hit on the trade deal news. And yeah, they want the dollar lower. So that's bringing the dollar yen down. Gold with a nice recovery. Again, little pullback pattern to the 50 MA and, bounced up this week. Again, kind of a similar kind of look, like kind of a flag here, right? Just consolidating. No problems here. It's doing what it should. Silver breaking out of this flag. Now, what I want to see here for silver to break out to new multi-decade highs is I'd like to see a rally here to about 35. Right, somewhere in this area, right? You can see this has been resistance, right? There's a big seller here, right? Whoever did this does not, they had deep pockets, right? You knock silver, which is like the 7th largest market cap asset in the world, right? You knock it from 35 to 28 in 3 days. That's not chump change money, right? But I want to see this up here and then pull back to a higher low. I think that could be ready to break out if that happens. Okay. So that's what I would want to see here for silver, but it needs a little bit more structure. Gold miners, again, same kind of thing. Pullback pattern looks good. SILJ, SIL, SIL right up at 52-week highs. So they're acting well. This is leading the metal right now. Look at SIL here. 52-week highs. SILJ not so much, but SIL is, and silver futures does not have a higher high. So it's the miners are leading. That's a good sign. Platinum broke out this week. It left me behind. I was looking at you snooze, you lose, I guess. But yeah, nice pattern here. We talked about that, and it's up every single day this week. So it broke out on me. If you guys got it, good job. I know I give some of these out as freebies here if you want to take them. I didn't take it, I should have, but nice pop there for PL. Palladium, nice pop as well, though not following through as much. We knew that 1050 would be a level, but if it holds up here, puts in a higher low, we can try 1075 and then higher from there. And then copper still is on my no-touch list, but it did get a pop this week, or excuse me, today. Again, tariff news popped it up 4%. So Good job there for a higher low. Needs to clear this for a higher high, and then you have better structure. But this has still just been all over the map here. I have not touched it in a while. Bitcoin new all-time highs. What can you say? And it's pulling back a little bit here today, but we've been adamant telling you guys that, look, this is just a pullback pattern on the weekly. And we said we were adamant about this last year too with that pattern there. If we look at a monthly, same thing, just a pullback to the 20 MA, no problems with this. It is not, there's nothing wrong with it. Where it would be a little bit of a red flag is if we, broke back below, let's say 105, especially if we close the week there, you could make the case you got a false breakout, and then we're gonna have to go test lower prices. But right now, it's still acting well, and it's leading the market too. I think Bitcoin is sniffing out liquidity, gold is sniffing out liquidity, and the market's probably doing that as well. I mean, look at the futures here; we're acting well, and that's what these guys do, right? So, but anyways, guys, I'll wrap it up here again. You guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.